Andrew, salads, Mediterranean food, they're supposed to be good for you, so I figured maybe they wouldn't last as growth investments. What's going on?
Well, I mean, you're seeing a number of high-flying restaurant stocks get hit hard, and recently, including Cava, which is Mediterranean themed. You're seeing it in Sweetgreen, which makes those $20 salads. Even Shake Shack and Chipotle have been getting hit too. It just shows some of the risk in some of these hot concept restaurant chains where you have very high valuations on the stocks.
You wouldn't be buying any of these at this?
I mean, even Cava's come down more than 50% from its high. Just got hit recently. Same store sales are slowing to like the low single digits from 20%. Late last year. It's still trading for about 100 times earnings. Shake Shack has got a similar multiple. Even Chipotle. People may be starting to get a little bit tired of burritos in the bowls.
I've never been to a Cava. Anyone want to give me a two-word review? Al?
It smells great.
Smells great.
It's mushy.
It's mushy, but it smells great. There you have it. Okay, Megan, how about a stock pick?
I actually think that Newmont is something worth looking at. Obviously, this is the world's largest gold miner, and my colleague Dan Victor is actually really interested in this, not because necessarily of its upside with gold, which of course Andrew pointed out earlier, but it has, some attractive valuations. It's trading for about $69, and it has had a climb this year, 85%. But it is one of those situations where, generating really strong earnings and free record cash flow.
That sounds nice. Al?
Elevators. Otis Worldwide. It's actually had it's a really high quality industrial, about 15% operating margins, very good service business, fallen on hard times. About 70% of the business is outside the U.S. China and Europe have been really weak. Get this. After the last 8 earnings reports, the stock has dropped. It dropped 12% after the last one. But following the drop, it got upgraded twice. So I think Wall Street sees a bottom in elevators.
We were talking about it. We were talking about it a little earlier, and Andrew all but attacked you because he felt like you weren't giving enough credit to the service end of the business.
Services is everything at Otis, and the stock's around 20 times earnings right now.
It's about 19 times, which is a big discount to its history. And so every time there's an escalator out, that's eventually revenue for Otis.
He says 20 times. You say, can we call it 19 and a half?
19 and a half.
What's the difference there?
All right. Al, Megan, Andrew, great ideas, and thank you.